Hi there, welcome to kneppyinvests. The company I'm going to be talking about today, Revasum, is not a company I've done a lot of research on, and whenever I look at what they do, it mostly goes over my head. You can see a bit of a picture of one of their pieces of equipment on the screen here. Their 6EZ silicon carbide polisher. Revasum, they're based out of California, I believe. I'm not sure exactly why they're listed on the ASX. I haven't really been following them too closely since they listed, because they listed about $1.80 and the share price has fallen from that level to about 30 cents. This company was bleeding lots of cash. However, they have turned things around, hence this video. So before we talk about the Appendix 4C they released in April, just a few facts in regards to Revasum. Revasum designs and manufactures equipment used in the semiconductor device manufacturing process, including their new flagship 6EZ silicon carbide polisher. They also have a silicon carbide grinder, ticker code RVS, a market cap of only $35 million, revenue of $20 million in the financial year 20, and they were operational cash flow negative by $7.1 million. They did have a problem with how they were spending money. However, they have addressed that in the past 6 months, it seems. In their, they did release AGM investor presentation on the 18th of May, and they mentioned in that presentation that the second half of the financial year 20, they only had an EBITDA loss of $100,000, and that was driven by higher gross margins and aggressive reduction in discretionary spending. And that seems to be a big problem a lot of these small cap companies have. They love to spend, and if you can just hone in that spending, you will become operational cash flow positive. So it seems like Revasum management have decided to rein in their discretionary spending, and instead of being operational cash flow negative by $7.1 million, we'll see how they've turned things around in this, well, the March quarter anyway. Price to sales ratio of 1.8. If you do like what you hear, if you know a lot about semiconductor devices and silicon carbide polishers and grinders, maybe this is the company for you. They released their Appendix 4C on the 26th of April. I do, however, also recommend reading the AGM investor presentation on the 18th of May, because they go into great detail on what they do. So let's have a look at their Appendix 4C they released on the 26th of April and see if they are operational cash flow positive, to see if they have turned things around. Well, I think it might surprise you. Because Revasum are based out of California, they do report in United States dollars, which is okay. I don't mind that at all. And for the March quarter, they received $3.9 million in receipts. If in isolation that tells us nothing, we need to know the trend. I'll show you the trend in the next slide. They haven't been listed on the ASX for that long. I think they listed in late 2018, so about 2.5 years, which means they do have enough quarterly data for me to see if there's any trends. So we'll have a look at the trend in the next slide. But more importantly, right down the bottom tells us if Revasum is operational cash flow positive. And remember, in the financial year, they were negative by $7.1 million. But for this quarter, the March quarter, they were positive by $145,000. They began the quarter with $1.4 million of cash, but they did do a $6.1 million capital raising, which was completed in February of this year. So they finished the quarter with $7.3 million of cash. One of the reasons they did that capital raising was to bring their 6CZ silicon carbide polisher to the market. And it looks like they have received a fair few orders in regards to that piece of equipment. So now let's have a look at the receipts trends going back to when they listed in late 2018. Since Revasum did list in late 2018, we do have almost 2.5 years of data, so we definitely can determine whether there's any sort of trend. And unfortunately, there is no discernible trend going back to their first quarter, which would have been the December 2018 quarter. They received $4.1 million in that quarter, and the most recent quarter, 3.9. So just using those two, that start point and the end point, there's actually been no increase in cash receipts. Two really good quarters back 2 years ago, or 1.5 years ago, $8.7 million and $8.6 million. However, you could argue since the COVID-19 financial panic, that March quarter of 2020, where they only received $2 million of receipts, they have started to grow things. There could be a trend developing. We might have to wait and see. But the most important thing here is they were spending a lot of money, discretionary spending they called it, and they've honed that in. And when we look at the chart, I'll show you one of these, I think it was the July, so that would have been the June quarter in 2019. Even though they had very similar cash receipts than this quarter, the amount of cash burn they had in that quarter was significantly higher than this quarter. So now let's have a look at the Revasum chart. This is the chart of Revasum going back to when they listed on the ASX in late 2018. For the first 2 years they were listed on the ASX, you did not want to be a shareholder. Share price fell from that high of $1.80 when they listed to a low of just under 19 cents towards the end of 2020. So that's a significant decrease in share price. During that time, you can see they did release a few Appendix 4Cs, and there's one Appendix 4C I just want to focus on, and that was released in July 2019. That quarter, they did receive $3.7 million in receipts, which is very similar to the most recent quarter, which they did receive $3.9 million. However, you can just notice a difference in operational cash flow. In the March or the June 2019 quarter, they did burn through $4.6 million in operations. The most recent quarter, instead of burning through cash, they were operational cash flow positive by $145,000. The company has turned things around financially, and that's a very important aspect of this business. The downtrend in the share price did come to a completion towards the end of 2020 or the start of 2021. Share price has been going sideways since then. We have seen a little bit higher volume, not greatly, but what I've been waiting for now is further good financial news from the company, perhaps another good Appendix 4C, maybe higher operational cash flow, positive operational cash flow, maybe some more orders, significant orders. And even though what this company does goes over my head, I'm not the sort of investor that only wants to invest in things I know, because if I follow that sort of logic, I wouldn't buy anything, because really I don't know all that much. So what I'll be waiting for here is some confirmation that the company has turned things around, that they're bringing cash into the business. And for a market cap of $35 million, and for what they do, I think there is promise here. But I'm just going to wait for confirmation before I take a parcel in this company. That is all I have for this March quarter Appendix 4C video for Revasum. Not a company I've delved deeply into in the past, so it's good to find new things about a company I don't know much about. Hope you have enjoyed it. If you do have any questions about this company or any other company on the ASX, make sure you leave some sort of message or question in the comment section of this video, and I'll answer it happily in the future. I might be a little bit tardy in answering it because I do get a lot of comments and I do have to do other things as well. Now, the last thing I should mention is I'm not a financial advisor, so if you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's all for this video. Have a good day. Talk to you later. Bye.